we're gapping up in the SPYs this morning near yesterday morning's high. Yesterday was pretty bullish for the market after failing at last Monday's high and flushing late morning. We did hold the support, our resistance band support. And closed above 273, actually closed right above last Friday's high. So buyers are firmly in control. If we get, let's go back a little bit. So if we can get a close up here, this area up here, we're then looking at this pivot high from mid-March, which I think I mentioned yesterday. So it's something like close here, maybe 1 day, 2 day, and then start to grind and come into this. This will be the next critical area for the market. But certainly the pullback that we saw in the last week or so in the market was different in both quantity and quality than prior pullbacks, which were just disasters. Even like this pullback here from 271, in a few days we're in the mid 260s, then tested 260, then tested 260 again before this pop and consolidation. So if you look at it, it's basically over the last few weeks, the market changed in character. It was this flush below 260 in the big uptrend day, the grind all the way back to above 270, this consolidation up here for about a week or so, and the market seeming to prepare to work its way back up into this area. So use yesterday's range. If we, on the open, get above 274 and we're holding above yesterday's high, we can look for that move up to 275. If we flush down, it's going to be 273.40 to 273.20-ish, this area right here. On IWM, we continue to grind higher, making new all-time highs.
A&B expanding production in North Carolina and Woolman's plant.
Just looking at it, if you look at this move here from 154, we moved up to 156. You can see as it's moving up, the pullbacks are pretty nice size. And once we got above this 160, 160.50 all-time high, failed there the first time, tested 158. Second time we got above it, it's really starting to compress the volatility. And small caps generally have higher volatility than large caps, the SPY. So it's really telling that this is the way it's behaving. And so it could go a lot higher. You want to be careful about shorting this unless something really changes in the price action. All right, so there is a bunch of stuff going on. Earnings season really winded down a couple of weeks ago, but then we get these stragglers that every quarter they kind of report towards past the main part of earnings season and before the quiet before the next earnings season, and it's the same numbers every quarter. So the first one is Kohl's, KSS. It's gapping up to an area where, let me show you the daily. So I think we looked at it this day here. This was February 27th, probably was the last earnings. And actually, no, this must have been the last earnings, which is the higher volume. I'm not sure what caused this gap up right before earnings. But this is where it failed, 69. Doing really well for retail in terms of where it is versus the last few years. So it topped out in 2015, 77, 78. It's just crushed. And this will be like the fourth attempt to basically break out of this consolidation range that started beginning of the year. And as we speak, it's breaking out. It's done about 280,000 shares in the pre-market. So it's a decent amount of volume. I put on the sheet 69.5, 70 is resistance. So the way I'm looking at this is the fails right here on the open. I want to see what the pullback looks like. A shallow pullback into 69, 68.80 where they were buying in the pre-market. It's quite bullish. Even a deeper pullback into 68 would be fine. But if it has a deeper pullback and fails to get back above 69, I would start thinking about a failure there. The numbers, right, they crushed the EPS, but it was really the revenue numbers that were solid. So maybe the fourth, fifth time is the charm here on this one. But just understand that this area right here where it is as I'm talking to you is kind of a dangerous area to be long. So we want to see how much of a flush happens on the open. The next one is Toll Brothers, TOL. This one is getting hit. Let's look at the daily on this one. So it broke out in October of last year. And continues to test this, kind of retest the breakout area. So you can see this was the high. It broke out above, had a pretty clean, very low volatility trend. I'm not sure what happened on this day, but that was pretty nasty. They made a higher high, and they gapped it down again, which was pretty nasty. Gapped up on some good news here. This is probably last quarter's earnings. So last quarter's earnings were real good, and then they just hammered it down to 43. And the numbers looked okay again. I'm not sure if this is related. So they're a high-end home builder. I don't know if this is related to the lowering of the mortgage interest deduction, the deductibility of property taxes. They definitely serve the high end, which is, a lot of that is in the Northeast where these states have been impacted by the new the tax law that limits deductibility of local taxes and property taxes, et cetera, and interest rate mortgage deductions above 750K. I think a lot of their houses are $1 million plus. So, but if you look at the numbers, it doesn't seem. My hypothesis is probably that thing combined with the fact that mortgages now are looking like they're above 5%, which hasn't been the case in years, is what's hurting this. This is really important support right here. So if it breaches it, and then you can kind of start to think of deeper pull-in. So here's the low from the other day. It's 40.70. Looks like there might have been a print down there in the pre-market. What did I put for resistance? 43 and 39. Right. Okay, so the first resistance is here, right here. But if it's holding below 42, I think it's okay to be short this. Just the way it's acting is not good. We just don't have enough volume in the pre-market to make a lot of judgments. But here's first real resistance. Next resistance is here. If you see it holding below 42 and there's somebody selling, you want to give it a shot to see if it flushes down to last week's low. I think that makes a lot of sense. ASCIA, this one gapped up a couple weeks ago to 37, was a nice short right from the open. Came back down, they started buying it over the next few days. I didn't even notice they were buying it at 32.5, 4 days in a row. It's gapping up again. They're impacted by the ZTE stuff. Fuck, are you kidding me? Fuck. Oh, lordy lord. The downside of doing the morning meeting. All right, so it failed up here again. I don't have them on the conference call right now. According to my platform, isn't color coded yellow, which would mean it would be on the conference call. But I guess there's no other reason why it would drop $3 like that. So perhaps they are in the conference call. So since it dropped so quickly through 67, 68, now it's 65 and a half. If we play for a bounce in this area here, it comes back up, you want to see if this fails again, something like that. That's fucking annoying. TJX. TJX did not look good to me. So they gave guidance, and I think people are confused because of they gave some numbers related to benefits from the tax and other detrimental numbers, and I just, I'm wrong on this one sometimes. I've actually over the last few years shorted it a few times, and it stayed strong after the open, but in this area right here, it's into 87. It's similar to Kohl's actually in terms of, well, is it really similar to Kohl's? Let's see. Well, it's a more bullish chart than Kohl's, so obviously it's at the all-time high. TJX is a lower-end retailer. One of the things I've been talking about for the last few years, you see it very much in the dollar stores like DLTR, is these companies seem to be less impacted by Amazon because of the lower income levels of the typical shopper. I think as the stores that deal with higher income people who just do more of their purchases online have been hurt more by Amazon, and some of the lower tier stores where people do less e-commerce. At least has held up pretty well over the last few years. But regardless, this is a bullish longer term chart. Obviously, it's at the all time high here, testing. But again, it's got to hold above 87 to think that you can be long it. Wow, below 65 now, Kohl's. It's a repeat of the exact same thing as last time. Okay, so Fitbit. So Fitbit was weak all day, but don't confuse this with the type of weakness after some company has bad news. Because I mentioned yesterday they did a merger. The merger ARB funds could have been selling it all day. But it dropped 80 cents, I guess, when I was off the desk late in the day and I got stopped. It's above 31 again. There definitely were buying it into this longer term support. I bought it here on the open. It had a nice spike, sold a bunch of it, came back down, bought it again. It was pretty much loaded into this 80-cent support level. Never could hold above 31, sold here some. Then eventually got stopped out below 90 cents and 80 cents. But I've seen plenty of these happen where it settles down, you lose track of it a couple of days later, and it worked its way back up to just grinds all the way back up. So we want to continue to monitor that closely. MU. It went crazy after hours. A rumor started that they were going to do a $10 billion buyback. I have not seen a story that actually confirmed they're doing that $10 billion buyback, but those numbers that caused it to move higher in the pre-market was their analyst day raising guidance, and they got a bunch of people who put raised price targets on this thing, like $80, $90. So all the bullish analysts raised their numbers, raised their targets, and the $10 billion buyback rumor in the after hours caused it to pop to 58. It is now back in an area where it got crushed from a couple months ago. So remember, it had the earnings. After the earnings, people liked it. It went up to 63. And then we bought it into this pullback here, I think into 58, 59, whatever it was. But then it made the lower high and it gapped down. And then in 2 days, they obliterated it. And actually, within a week, it was at 50. So it's now worked its way all the way back. I was buying this at 46, 47 a couple of weeks ago. So it's basically back here. another one. I mean, it's acting like it could take out 60 today, but we want to see on the open, does it hold above 59? So far, it's pretty clean uptrend in the pre-market. Looks like 59.20. So buyers are definitely in control now. We want to follow this pre-market trend. And then lastly, Baidu. So this definitely was a possibility that Baidu could get severely oversold short term because of the nature of the people who got long it in the last month. It had the breakout from 230, caught a bunch of people, and then when it consolidated for a week and broke out again, it went up another $40 real quick, or $35. So the people, everyone above 256 who basically bought this last breakout, right on the open when it dropped 256, all these people were out of the money again, and they started selling, and then these people started getting nervous, and that caused the overshoot to the downside. Doesn't mean that it can't work its way back up to 260 over the next couple of weeks. It's just it really is the nature, not the news. The news of the CEO leaving caused it to initially gap to, I guess, here. It's more the nature of the people who got long it. Momentum people who bought this breakout, went straight up. They saw the breakout hold here, then they chased it. And so now they're chasing it down. And quite frankly, if it actually comes off more over the next few days, that would be even better, because I would then start to put on the options and do all sorts of longer term things, because the fundamentals haven't changed. The market's getting stronger. It should work its way back up to 260, 270. So it's very conservative trading it yesterday, so I didn't really get hurt. Today, what I'm thinking is, as long as it holds higher, yesterday it double bottom, it's gapping up with the market this morning, I guess. If it holds like 241 or something like that, gets sold on the open, holds 240, 241, and then gets above 244, then I'll start to think of a bigger bounce back up into the high 240s. Then we'll see. Just got to be patient with something like this. Oh yeah, just quickly, it's been up here for a while and hasn't broken out. We want to be careful. It's failed a bunch of times. It's a little bit similar to the sense that Baidu, where people got trapped. Obviously, there's no negative catalyst, but it really should have broken out by now. Got up here, got up here, got up here, got up here. It's now failed to break out like 4 times. So I would think if it gets above 199 on the open, pay attention. But if you then see it back down below 199 and then below 188, it's probably a pretty good short.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.